Picture this: a world where every investment you make not only grows your wealth, but also nurtures our planet. Sounds too good to be true. Well, welcome to the green economy revolution. It's reshaping our financial landscape faster than you can say sustainable growth. Welcome to the Savvy Finance Corner YouTube channel. Wealth begins with knowledge. The green economy is more than just a buzzword. It's a paradigm shift in how we approach economic development. At its core, it's an economic system that aims for sustainable growth while minimizing environmental risks. Think of it as a delicate balance between profit and planet, where renewable resources, low-carbon solutions, and social inclusivity take center stage. Why should you care? Well, as climate change intensifies, everyone from governments to corporations to everyday consumers is demanding cleaner, more responsible ways of producing energy, food, and goods. The green economy isn't just a feel-good concept. It's increasingly seen as our ticket to long-term economic stability. And the numbers don't lie. In 2022, global investment in renewable energy surpassed a staggering $500 billion. Looking ahead, experts predict we'll see trillions poured into green infrastructure by 2030. Even more eye-opening, ESG funds, that's environmental, social, and governance for the uninitiated, already account for more than a third of global assets under management. That's a lot of green, both literally and figuratively. So, what exactly falls under this green umbrella? The focus areas are diverse and exciting. We're talking renewable energy like solar, wind, and hydropower. Sustainable agriculture that feeds the world without depleting our resources. Green infrastructure projects that transform our cities into eco-friendly havens, and let's not forget low-carbon transportation. Electric vehicles and hydrogen-powered transport are no longer science fiction. They're becoming our reality. But here's where it gets really interesting. Traditional investments often prioritize short-term financial returns, often tied to fossil fuels or resource extraction. Green investments, on the other hand, play the long game. They balance financial gain with long-term sustainability, resilience, and ethical considerations. It's not just about making money. It's about making money responsibly. Now, you might be wondering what's driving this green investment boom. Climate change is the obvious culprit. Rising global temperatures, extreme weather events, and resource scarcity are pushing governments and businesses to adopt greener strategies out of sheer necessity. But it's not just Mother Nature calling the shots. Government regulations are playing a huge role. Policies like carbon pricing, subsidies for renewables, and emissions targets are creating strong incentives for businesses to go green. And let's not forget about consumer demand. Millennials and Gen Z are flexing their purchasing power, preferring eco-friendly products and pressuring companies to adapt or get left behind. Just look at the surging demand for electric vehicles and plant-based foods. Technology is another key driver. Breakthroughs in battery storage, solar efficiency, offshore wind, and carbon capture are making green solutions not just viable, but often more competitive than traditional fossil fuels. It's an exciting time to be alive and to be an investor. Speaking of investing, let's talk benefits. First and foremost, there's the potential for impressive financial returns. In some markets, renewable energy has actually outperformed oil and gas. ESG funds are attracting record capital, and companies leading the charge in clean tech often see rapid growth. But the benefits go beyond just padding your wallet. Investing in the green economy contributes to long-term sustainability. By reducing our dependency on oil and coal, we're protecting economies from price shocks and resource depletion. There's also a significant social impact to consider. The International Labor Organization predicts the green economy could create a whopping 24 million new jobs globally by 2030. That's not just good for the economy, it's good for communities worldwide. And let's not forget the bigger picture. By putting your money into green projects, you're actively contributing to global climate goals. You're helping nations work towards their net zero emissions targets and supporting the Paris Agreement. In essence, you're playing a part in helping the world avoid severe climate consequences. Not bad for a day's work, right? But let's be real, no investment is without risk, and the green economy is no exception. One of the biggest challenges is the high upfront costs. Renewable projects often require significant initial investment, which can be a deterrent for smaller investors. There's also market volatility to consider. Green stocks and carbon credit prices can fluctuate wildly due to policy shifts and uncertain demand. Another risk to watch out for is greenwashing. Some companies exaggerate or misrepresent their sustainability claims, potentially misleading investors. It's crucial to do your due diligence and look beyond the marketing hype. There are technological risks too. Many green technologies are still in development, and not all will succeed commercially. And let's not forget about uneven adoption. Developed countries tend to advance faster in green tech, leading to imbalanced growth opportunities across the globe. But for every challenge, there's a success story that proves the potential of the green economy. Take Tesla, for instance. They didn't just enter the EV market, they revolutionized it, proving that sustainability can be incredibly profitable. Or look at Rørsted, a company that successfully pivoted from fossil fuels to become a global leader in offshore wind. And let's not forget NextEra Energy, now the largest generator of renewable energy in North America. Of course, there have been failures too. Some companies have overpromised on technology or depended too heavily on subsidies. We've seen biofuel startups collapse due to cost inefficiency. The lesson: investors need to analyze business models, not just sustainability claims, and diversify within the green sector. So how do we balance profit and responsibility in this new green landscape? ESG criteria provide a framework for evaluating not just financial performance, but also environmental and social responsibility. Diversification is key. Combining investments in renewable energy, sustainable agriculture, and green tech can help balance risk. When it comes to strategy, it's wise to avoid overexposure to unproven startups. Instead, mix established players with carefully selected emerging innovators. Think of it as planting a forest, not betting on a single tree. Looking to the future, the outlook is promising. The International Energy Agency projects that renewables will supply nearly 50% of global electricity. By 2040, that's a massive shift in just 2 decades. Policy and technology shifts could accelerate this even further. Carbon neutrality pledges and breakthroughs in areas like energy storage or hydrogen technology could supercharge adoption rates. In fact, we're likely to see green investment move from a niche interest to a core part of most portfolios. It could follow a similar trajectory to tech stocks in the early 2000s. Once considered speculative, now fundamental to any balanced investment strategy. In conclusion, the green economy presents both incredible opportunities and significant challenges. It offers strong growth potential, but also carries financial and technological risks. For investors, the key is to adopt a balanced approach. Seek profit? Absolutely, but do so while contributing to global sustainability. Diversification and careful due diligence remain as critical as ever. Remember, in the world of green investing, we're not just growing our wealth, we're nurturing our planet's future. And that, dear viewers, is an investment that pays dividends for generations to come. Until next time, keep your finances savvy and your investments green.